Okay.
And we will officially begin. So friends, welcome. My name is Stephen Fetter. I manage the United in Learning program for the General Counsel Office, as you know, and it's a surprise as well as a delight to be back with you again. We weren't expecting to have to do this quite so soon, but there's some news, and this is important. It's exciting. Things have changed. So we told you we would be back as soon as that happened, and we've got a full team and a full lineup here for you. So delighted to have Erik and Clyde back. They're joined by Kendra, and we're waiting for Katja to come on the line too. I'm going to open your PowerPoint here, Erik, and without further ado, I think we should just get right down to it. So thank you.
Okay, folks, as we kick things off, maybe, we do have our traditional land acknowledgement. And tonight I'm broadcasting from a different location, so you're going to hear a different one. This webinar, at least my portion of the webinar, is being broadcast. I'm broadcasting on Aboriginal land that has been inhabited by Indigenous peoples since time immemorial. This area has been the homeland of the Anishinaabeg people and what has come to be referred to by the English as Muskoka Parry Sound. Today, with their enduring presence, the Anishinaabeg still share Parry Sound and Muskoka and parts of the surrounding areas as their traditional territory. Families know these lands as the hunting grounds, medicine areas, and gathering places related to them through oral history passed down for generations. Other Indigenous nations have come to occupy this land, such as the Haudenosaunee and the Métis Nation. We are grateful for the opportunity to broadcast from here, and we thank all the generations of people who have taken care of this land for thousands of years. This recognition must also be clearly and overtly connected to our collective commitment to make the promise and the challenge of truth and reconciliation real in our communities. So with that, I'm going to ask Steve to move on to the next slide, and another familiar element for all of us. Every finance webinar starts with the new creed, and reminding us that we are not alone. And as a church finance person, I've got a team here where we're not alone. Clyde has been helping out throughout, and Kendra has jumped in a big way, and Katja and treasurers across the country are sharing information and trying stuff. So that's made it just a little bit easier during what's been a very, very challenging time. Next slide. So what we're going to cover tonight, a little reminder and maybe a commercial for mission and service. You might have seen that in the broadcast note that went out to treasurers as well. But the CEBA, the Canadian Emergency Business Account Loan eligibility has been expanded now so that some congregations and many outreach ministries will be eligible, and we'll talk about that in some detail. We've also got the most recent information, which just came out on Monday with regard to the 75% subsidy program. We'll do a quick recap of the various programs because we may be breaking for the summer, and the greater detail will be in last week's or the last webinar we had, which I think was May 28th. Want to remind folks that the help desk we've created has worked beautifully. Clyde, Rose Camborne, and Carla Hacker have been helping folks navigate getting registered with CRA, and I think we're totally current there now. So if you need some help, that facility is still there. We'll also have a little bit of an update on what we've heard from our insurers, and although it's not the topic tonight per se, we do have Kendra here with us and able to help with some questions on reentry. So again, my usual disclaimer, everything I'm presenting tonight is accurate to the best of my knowledge as of 3 p.m. And some of it, frankly, is going to change next week. So next slide, please. So key points, the tenant, the rental assistance program, just reminding everyone that we thought we might not be eligible for a time, but we are. And we're now eligible for the business account, the $40,000 loan program, which, if you are eligible, is a very significant help, because it's quite easy to access and so on. And I've been just reminding folks about insurance premiums for the United Church and every other church, and frankly for lots of folks going up pretty markedly because of the way the insurance market is. And for Susan Jackson, I just want another reminder to folks to get their church statistics in, the famous blue forms. We hope you're more and more comfortable doing that online, because as you're learning through all of this, that is the way of the future, and it frankly means that we can save administration costs and focus more on mission. So next slide, please. So mission and service, it's funding work responding to COVID. Our congregations in many cases are closed, but our outreach ministries aren't, and that work continues not just in Canada, but around the world. And the reason I'm flagging this, next slide please, is because M&S, mission and service, is the lifeblood of the work of the broader church. This isn't a matter of funding, general council office or anything like that. We're really looking, we need to know mission and service goes right back out again. And what we have found is that some congregations haven't yet transferred any of their 2020 donations. Now, I understand the need to manage cash flow and all those kinds of things, but these monies are given in trust by the donors, and we're just reminding folks that not only do we need to get that money back out in circulation, but we also need to get a sense of how much might be coming in and how much might be impacted by COVID-19 in planning for supporting our partners next year. So next slide, please. So again, we want to thank everybody who and all congregations across the country that are supporting mission and service. We completely understand that right now, local cash flow concerns have been probably the greatest they've ever been. But we ask that if you can, let us know how you're doing with mission and service, or forward those monies. It will be a big help, and they'll be put to good use. In fact, when it comes to supporting, say, local congregations, mission and service helps fund United in Learning, the very work that you've all been participating in all these weeks and probably months in some cases. So with that, that's the ask and the commercial, and then we'll move to next slide and get into the meat of tonight's finance program. So if you check the website, the problematic language has disappeared. No one has said that. There is talk of a second stream of the business account program, but you can apply already if you qualify. So churches and other ministries are eligible for this account if you have a payroll greater than 20,000. Early viewers might remember the number was originally the lower threshold was 50,000, but it's been reduced to 20. However, you must have reported on your 2018 and potentially 2019 annual return revenues reported on line 4610, which I think many of us do, or sales revenue on line 4640, which frankly fewer of us do. So check that, but that is the threshold for eligibility. And I would, and I'm seeing a question from Bruce, 20,000, yes, per annum. So that's an annual payroll cost with your payroll provider, which is normally ADP. And again, the dates have moved. As this program evolves, repaying the balance of this loan before December 1st, 2022, will result in loan forgiveness of 25%. So if you happen to borrow the full 40, that would be a 10% grant that you'd be eligible for by repaying the 30,000 by that date. So that's a quick recap of the program. We're going to just dive into a few more details. Next slide, please. So here's the wording, and a number of folks have asked me. So the wording that is crossed out is what it used to say. And it basically used to say that you had to be a corporation and you had to have sales of goods and services. And none of our congregations, I think there's one in Canada that is a corporation. The new language talks about the supply of property, which is what rental income is. And it has removed, you might note it's removed the word religious, but more importantly, it's removed the word corporation. And these are changes that just show up on the site. And we have had multiple assurances for several weeks and frankly over a month that the intent was for small employers like our churches to be able to access this money, and everyone kept saying, well, you have rental income, don't you? So this is the language that gives us comfort to say we are now eligible, even though it hasn't been announced and probably never will be. Next slide, please. So Clyde spoke to this earlier, but there's a whole bunch of things. I mean, the last thing you would want to read about in the paper is that some government money went to reward management bonuses or something like that. So there is some very strict language around this money is not to be used to repay debt. It's to be used to repay non-deferrable operating expenses. Now, you don't have to put this money, like all you need to do is be able to show where it is going. So if you're transferring some money from this account to make payroll or pay the tax bill, this should not be an onerous requirement for anyone. But it's important to note that, again, keep records of what you've used the money for. That's the whole idea of the program. The idea is not to, we wouldn't want the government putting out any more tax money than it needs to help the whole economy make it through this. Next slide, please.
Before we go on, Eric, a couple of questions here in the chat I just want to highlight. Somebody's saying, what percentage of rental income do you need to qualify?
There's no percentage stated. The one word that folks might want to bear in mind, it says regular supply in the language.
That was the next question. What does that mean?
Well, I mean, if you rent the building once a year, then you might be a little aggressive interpreting that as regular. But periodic rentals as a key revenue stream, because that's what we're talking about, will qualify. So I don't think we need to get hung up on that. The intent is for the smallest employers, and now with the other stream that we don't really care about, they're trying to make this program available to as many people as possible to keep them in business and help them avoid layoffs. That's what it's about. So I wouldn't get too hung up on that. There isn't a ratio. And most people, I would think it's a relatively significant number in proportion to their overall budget. So I would say not to worry there. And there is no limit stated.
Okay, so the next question, somebody's been consulting with a TD bank. Apparently it still doesn't have, apparently it's still saying that religious organizations are excluded. So have you got some kind of government website we can point them to say they're out of date?
Next slide, please.
I saw that link coming. Thank you.
Yes, there it is. What they can say to their bank. Okay, it may be that the attestation form hasn't been circulated to my office or something, okay? But the official Government of Canada website is there at the bottom, and it specifically has the new language in it, which in turn makes our folks eligible. Now, key point, this is called the payroll stream, and you do have to have a business account. And if you do, there's 232, there's virtually, I'm sure there's some United Church exception always, but every credit union there must be, there's 232 financial institutions listed on there. So every bank has, if you have a business account, you can probably not even talk to your bank. You should be able to go online just the way our folks did back in March. However, if you don't have this online facility it might be a smaller credit union or something, that's where you talk to your financial institution. The one exception, and I'm not talking about it tonight, you can read up on it, the new program that is supposed to start, was supposed to start last week, and there's a mention of a delay, is called the non-deferrable expense stream. And this is for all the sole proprietors, people who might be running a business out of their personal bank account or don't have a payroll of 20,000. The only one that matters there is it's possible that you could have a lay-led congregation with at least 40,000 of non-deferrable expenses and no payroll. You might be eligible in this non-deferrable expense stream, but we're not talking about that tonight because I would think it would be a relatively rare situation.
So just while you're coughing there, Eric, conversation going on in the chat about whether this is yet available. It's not just people with TD that are having trouble. There's an account manager from RBC on the line who says the application process is not available for any of the banks yet. So I think it sounds like what you're telling us is coming, but maybe the banks can't process it yet.
Well, it is the payroll stream. So the part that may not be updated is the attestation. Someone mentioned that earlier.
Okay. So
to the extent that the new rules are already on the internet from the government. So that's an administrative adjustment where they've expanded the program. But I think it's great that we have these bank reps on, and if there's a caution here that the paperwork isn't available, then you may, your bank can tell you that. But what I'm saying is to the extent that folks have had the capacity to go and apply online and be approved, frankly, automatically, they could give that a try as well.
Okay. Somebody says our bank keeps telling us we have to be incorporated. As
I showed in the earlier language, it did say that, and it no longer does. Okay. So the issue would be if the attestation has been updated yet, that comes out of applying. So that may be an administrative change.
And it may be just that you need to kind of push it up the stream at the bank. Maybe the first person that you speak to isn't aware that the wording has changed yet.
Yeah, so certainly you start with showing them the web reference and saying you're eligible.
Okay.
And you are eligible. So the only question really, this website also references a delay. It was supposed to be June 19th in rolling out the second stream, the non-deferrable expense stream, because that requires all kinds of more proofs, and there's no question in my mind that the financial institutions don't have all that set up yet.
Sure. The last question, I mean, there are questions coming in about how to apply that I think you're going to address in the next couple of slides. But somebody's saying, what if I gave the money back? Can I reply again?
That is the one problem case. And I'm going to say this should be solvable. But there is a specific rule that if you've applied or if you've gotten it before, you can't get it again. So that is going to be a special case because, and frankly, it was one of the reasons I was suggesting not giving it back. That's not a criticism, but there is a specific prohibition, and I suspect there'll be a computer hoop or two that you'll need to jump. The intent and logic at all times, anyone who's done that has acted honorably, and hopefully that'll stand for something.
Sure. Meanwhile, if people did apply early on and they got the money, you're telling them they can now start to spend it.
Yes. No, there's no question about that.
Great. Thank you. I'll save the questions about how to apply until after you've told us.
Okay. Next slide, please. I think what we're going to be telling you, though, is, so just on the how to apply is first of all, go to your church's or your church's financial institution website and see what they tell you to do. The smaller ones, I think, will say call your rep. But I know for a fact that the larger, the big six and others have had very direct, completely online mechanisms for processing this money. So that's really it. You literally go to your bank and try electronically first, but after that, just say, what do I need to do? So switching gears, the news on the CEWS, which is the 75% subsidy, again, the government has announced more changes on this, but specific news is that it's going to be extended to 12 weeks. They announced that a while back, but we now know that the eligibility criteria for period 4, which is June 7th to July 4th, is going to be the same as we've been running with so far, and that's the 30% decline. We're not going into the detail tonight for any one of these programs. The last webinar we tried to do a detailed how do you do it for each. So on here, what we're going to say is that the period 4 is for wages June 7th to July 4th. You're going to look at your June revenue decrease. If you qualify for June period 4, if you qualified for period 3, that is the threshold test. The same logic that we've had all along through this, and that I think most of our listeners will be familiar with. Clyde was on a call just yesterday or the day before with the Payroll Association. We're told to expect some very different or at least some significant changes for July and August, how that's going to work. And just conjecture, I'm being more and more careful saying what's going to happen for sure, but just conjecture is that this could be announced next week because that's when the period starts. Okay, next slide, please. So this is going to be a quick recap, more to have it in the slides for people and so folks know where to look. I'm seeing a question from Katie about whether the 10% program is going to be extended. I would say, I've said this a few times before, almost certainly not. Nothing is for certain in this world right now, but I would say 99% that the 75% program and the various other programs that have been announced since supersede the 10% program. So, my answer is no, it won't be extended, and I'd be delighted to be wrong.
A question here from
so-
Liz about that, Eric. CQ still asks about the 10% number, but we were told it only referred to March, April, May. Do we still show the 10% anyway for period 4 and period 5?
No.
Okay.
Again, this is where and frankly, if they've modified it so if you hadn't ever applied for the 10%, you could ignore that entirely and just go with the 75 now. But here's the thing: the 10% was an outright grant. All you had to do is, as I say here, take it from the tax bucket. You have control over that with your payroll provider. The 75% you have to apply for and you have to qualify for. So I'm still very comfortable with the fact that we've said go get the 10 folks and then see if you're eligible for the 75. So it's only the 10% amounts that should be subtracted are whatever you max out for. So this is just a reminder of where to get the information. And I would encourage everyone to have a look next week at the 75% program, because there's bound to be detail then. I saw a question here: when does what payroll period is the last one for the 10% program? June 19th is the end date. So payrolls from March 18th to June 19th are the ones that you get to dip into. So next slide, please. Again, just wanting to have a snapshot of information. This is not the Canadian Emergency Benefit, the CERB as everybody's calling it. The one big announcement is it's been extended to 24 weeks from 16. There were recent changes all along on that. And again, we've talked in past webinars about needing a record of employment. And Clyde's been good enough to do a webinar for us on how to do that electronically. So next slide. Again, this is for completeness. If you any layoff considerations, and as this funding ends, we may have to look at that again. I hope not, but just a reminder that it is province specific, and your region will have the most specific advice for your situation. Key points here are that for short-term layoffs, we will continue to pay core group benefits funded from the group reserve, because this is a temporary thing, and arrangements can be made to keep up pension plan payments. But again, tonight we want to have this in the slides and have mention of it in case you need to dive deeper in, but that's not the topic for tonight. Okay, next slide, please. So the loan program, the church loan program, and we've had about 30 congregations so far take advantage of this. It's intended to actually kick in more after as a supplement to church programs, but the whole idea is that if you need it, it's there. And we have the online application. I believe it's linked on quite a number of region websites, but it's available at the COVID-19 General Council site. And the application you fill in online, as soon as you hit submit, it goes to the right person in your region. And again, this is funded by an extraordinary grant commitment from the United Church Foundation. And on the church side, we're also looking to expand our lending or our borrowing. So we're borrowing money to fund M&S commitments. We're borrowing money to fund congregational support here. So that's why it's so important. Next slide. And here I just have the loan summary again. want to flag that we started out with some initial dates, as did the government, and the government's changed everything. So I'm allowed to change stuff too. And so what we're saying here is right now we were saying that the principal and interest be paid within 3 years, and that we would have an interest, an incentive to pay the loan off by October 1st, 2021. These dates may change, and frankly will change with loans that are taken later on in the cycle. You might, for example, find that if you took a CEBA loan, you're really incented to pay that off in time to qualify for the government grant. Well, I would borrow money for that. You need to be careful about borrowing all the time to fund current arrangements, but that would be a very compelling reason for me. The key message here is, and it may all change, or it will continue to be evolving, and we will listen to people's feedback and needs, because the whole idea, we're not doing this for fun, we're doing it because it's an essential thing, and frankly, the national church is going to be taking on more and more risk to get this done. Next slide. So just again, recapping for folks, wage and rental subsidy applications do not require regional approval. Treasurer, if you're a treasurer, your board should know what you're doing. The CECRA, I forget how I'm pronouncing that. It's a forgivable loan, so I wouldn't bother getting a further approval for that, because the whole idea is that it's being administered by CMHC, so they're calling it a loan. But as long as you adhere to the terms of the program, it's a grant. Loan applications, congregation board, region, and if you're doing an online application with a bank or anyone else, or with the national church, the assumption has to be that it's an authorized person that's doing it. Next slide, please. So now we're going to, one area where I'm reminded what it stands for, the Canada Emergency Commercial Rent Assistance. So this program, we've left in the details. This is the whole notion of either after the fact or if you've already forgiven rent. There's all kinds of different parameters, but you have an opportunity to pass on, and the whole intent of the program is to pass on significant rent savings that relate to April, May, and June. So even if it's after the fact, there's some detailed information on how it works. And if you have some questions, as far as I'm concerned, the leading expert in the United Church is on this call, and it's not me. That's a shout out to Kendra. But let's go on to the next slide. The details are there. A key point, if you haven't looked into this already, is that you have to have, it has to be what I would call a pure tenant as opposed to just a rental. So there should be typically a lease agreement. There's a regular commitment of space. And again, you must have declared rental income on your annual returns. The word commercial is misleading and has been clarified. Next slide, please. Tenants have to prove a 70% reduction. They attest that. At that point, the other numbers here we don't care about, I don't think. 50,000 rent must be less than that a month. Well, 20 million per annum. If there's any church getting that out there, you're probably not on this webinar. Again, here's just some technical elements that we're doing the same kind of logic around comparing income for the tenant. Next slide, please. So the landlord has to gather a proof of the reduction in revenue, the actual agreements, And again, there's various assurances provided that that this money, the benefit, will make it to the tenant. And as the first steps there were to register and so on. The how-to of all of this is included in the May 27th or 28th, whichever day it is. I might have a typo there. Webinar. Next slide, please. So this gets into how it works again, and is not something we want to cover in detail tonight, but the tenant pays up to 25%. You might, if you can get that, then you will be substantially whole. You'll have the government credit, and you're just accepting a 25% loss. But many folks are being more generous than that. And with a long-term tenant, everything you can do to nurture that relationship and keep them going is probably in your best interest. So the slide here, I see Kendra's putting some notes in the chat box. Those are probably more valuable than any words coming out of my mouth right now. So next slide, please. So we're going to take a break here formally to check for questions. I have not been looking at the chat box, but I think
I have, and I've got lots of them. So I'll do my best to collect more as I talk, but I can't collect questions and pose the new questions to you at the same time. So add your questions in, folks, and I'll do the best I can get to them. First set of questions have to do with the purposes for which you use the money from the loan, the CEBA loan. Mm-hmm. Because you were saying it has to be spent for specific purposes. So I've got questions. Can you use it for expenditures that are capital, like a new roof on the building, or to repair a leaky roof? Can you use it if you have cash flow problems? Or do you have to show that you've got cash flow problems? Were our bank accounts healthy right now? Does the money have to be used in this fiscal year? A bunch of different questions like that.
Okay, there is not a needs test. Okay, so that's point number one. So this is a facility that's made available without a needs test. So if it can help, like if you're financially healthy, then as a citizen, maybe you might choose to not access a government program that you don't really need. However, most of our churches aren't necessarily in that boat. And then we can get into splitting hairs, but the whole idea is to help meet cash flow. And the normal demands on cash flow are payroll, all kinds of regular operating costs, even repairing now a leaky roof. Mm-hmm. Replacing a roof, I would say no. That's a capital item that arguably can be deferred, and that arguably doesn't meet the definition of non-deferrable operating expenses. So it's payroll.
I'll tell you about my roof sometime, Eric, but I get it. Yeah. Okay, what about they repaving the driveway because the drive had to be torn up to repair a sewer line?
I think that's on the margin, but I would say that one, at least you've got a shot that it's a maintenance expense that arose, unexpectedly and arguably isn't deferrable. But here's my point. My point is that what I would do is use it to meet payroll and your other core operating expenses. I would use it and defer and direct the other money you might have to fix your driveway or fix your roof.
So payroll and for the 75%. Sorry. So payroll for the 75% program is just people to whom we issue T4s. But would this be broader? Could this include contract employees like maybe pulpit supply and custodian and music director, that kind of thing as well?
Absolutely. Those are all regular operating expenses.
Okay. Thank you.
Do me a favor, if you would, is not refer to any of those people that are contract as payroll. I just had another church today get audited by the government, and they got nailed on it because they called them contract. The government says, no, they're not. They're employees because of people referring to it that way in an email.
Interesting. Okay,
And
so we,
folks, you know, Clyde taught me this himself, but we put out a lot of material both at the region conference, presbytery, and national levels around the difference between a part-time employee and a true contractor. And we need to be very careful with that. And hopefully, even the way this program has been administered, they're highlighting the fact that someone on payroll is someone for whom you take at least EI, probably CPP, and potentially income tax.
sure. So, but what you're saying is that the CEBA loan can be used for payroll. It can also be used for other core expenses, such as paying these contract employees who are not on payroll.
Absolutely.
Yes.
Thank you. That's, I think we want to make sure about our words, and we also want to make sure about the concept. So those are the questions I have about the purpose of the loan. Friends, if you have others, add them to the chat, but I'm going to go on to my next category, which is about applying for this loan. Couple of questions here. Do we need regional approval to apply for the CEBA loan?
Yes. Basically, you are potentially encumbering the property. Your region might have if your region has a threshold around what type of property related transaction. I know some regions have a $50,000 floor. If they do, then you probably don't need the approval. But in general, when you're encumbering the property, which is what a loan does, you need regional approval.
Good.
Clyde, do you have anything to add from your experience? You were with the region, or at least a Presbyterian conference beforehand.
You've put it right in that most of the councils have a floor, and below that you don't need to worry.
Sure.
It wouldn't hurt to advise them you're doing it, but you don't need their approval.
So the best bet is to check with them and see what they need. Different regional councils have different rules across the country.
That's right.
But yeah, check with them and then do what they say. Okay. Next question. Is there a time limit to apply for the CEBA loan?
Not that I recall, but I might even look that up while others are talking. You'll certainly have all of this year, I think, but I'll double check that even while we're talking.
Okay. Those are the questions I've got about loan process. Couple of questions about the 75% wage subsidy program. Not sure if I understand this one, but Jim said, if we considered our rentals as honorariums or donations in 2018 and on the T3010, can we put them in as rental income in the 29 T3010 and then apply to CEBA?
My response would be, yes, you could do that, but why were they even put elsewhere to start with? Because rental income is rental income.
No.
And they're not honorariums, they're not donations.
So do you think that they should, the T3010 in the 2018, maybe they made a mistake and they should be amending that?
It's possible, but I know a lot of churches that have done that because they didn't like to call it rent.
Okay.
So and I'll offer just not a dissenting view at all, but just building on this. Yes, you could proceed. And first of all, the question would be if you even filed your T3010 for 2019, but there's a risk, okay? Because the technical requirement is showing rental income on 2018 and 2019. If it was indeed rental income in 2019, I think you could make the argument that you're living in the complete spirit and intent of the program, but just know that there's a risk.
Okay.
Because there is a technical element where you're offside.
The other thing with this is all of these programs require you to be consistent in how you treat things.
Okay. Makes sense to me.
Yeah.
Okay, application process. Oh, I was asking about the time limit. Sorry, and you answered that one. Sorry, the questions are coming in hot and heavy. Okay, calculating revenue. We had in 2019 we had somebody on restorative care. with the payments coming back to the church? Should they be considered income for the purposes of these subsidies?
Clyde, do you want to opine first?
I don't know where that one's going to go.
Yeah, it's interesting. I'm comfortable saying that it's very much a payroll offset. It's an insurance program.
Yeah.
And I'm not going to make the case that it's extraordinary. Like if you had a fire or something, that you could make the case that that's extraordinary. But it would depend on how you account for it.
Yeah, generally speaking, insurance claim money is not considered revenue.
And
that's
restorative
what this
care
would
would
be.
be an insurance plan, I suppose, under that.
Yeah,
Restorative
it
care
is.
is an insurance claim payment.
Yeah.
Period.
Okay, that's helpful. Thank you. Couple of questions about the 10% program. Won't you be glad when that's completely over? So somebody was on the second list from ADP. They've had one payment, but not a second one. Do they need to rattle the chain, or is ADP going to process that second list a second time?
Yeah.
How's that
I'm
working?
going to be talking about that, in the next segment.
Okay.
But the short answer is trust the system, and I'll explain in more detail. But basically, what ADP is doing, and some of this we've learned as we go, is ADP works with Eileen and the payroll team to do a giant batch, all the calculations at the end of each monthly cycle. So there's some elapsed time there. If you were in the second batch, you should be getting your May. Well, I might even be confusing my month. The short answer, I'm going to take you through it in a second, but the short answer is trust the system. If you're in the records now, you will get those payments, and it'll take a month or two if we have to keep dipping into the bucket. I'm going to talk about that in just a minute.
Okay, thank you. And the CEBA loans, in terms of purpose of the loans, they could be used to make M&S remittances, since that's a regular part of our budgets. Is that correct?
I would say no to that, Clyde.
I would agree.
Yeah. Just simply, it isn't a core operating expense. It is part of the budget. But I would again take the view, like, it isn't a core operating expense using business language. It is for the church. It's the most vital thing. I 3 slides asking for it, okay? But it isn't when you read CRA text. So again, you should be able to, in my view, find payroll, building maintenance costs, heat. There's all kinds of other expenses that you should be able to find to justify that.
Sure. Thank you. To apply for the CEBA loan, do you have to have already filed your 2019 T3010, or is it okay that you've just done the 2018 one on file?
I'm going to take the view that when this program started, very few people would have filed their 2019, and they've extended the program. They've extended filing date to December. So no, I don't think you need to have filed 2019. If you're dealing with a bank officer who's asking for it for some reason, you might want to offer it in draft or something, but there's no requirement to have it filed. And none of the guidance says so either, that you have to have done that.
Sure. And the last question before I'm going to turn to Kendra in a minute for the next questions, Kendra, but does the CEWS received in June count as revenue for the calculation of the 30% reduction relative to June 2019?
No. The government money does not. I say that repeatedly just because it's a question that comes up a fair bit, and this government money is intended to replace lost revenue and help you survive, and it's expressly not included in the calculation for income threshold.
Okay, thank you. So I'm going to turn to Kendra now briefly, because there's been a helpful conversation in the chat about the rental subsidy program, but the chat doesn't get captured in the recording. And so Kendra, if you could please say the things you've been saying in the chat so that we capture that in the recording and everybody will hear it, and not just the people who are reading as quickly as I am.
Yeah,
The question really is, I mean, there's a couple of questions. First of all, I was told by a lawyer we don't qualify because we agreed to reduce our tenants' rent to zero, and they tenants have to pay something. And someone else is saying the same question. So,
yeah, which is not, that's contrary to the intent of the program. The intent of the program is to help small businesses. So it says very specifically that you need to forgive at least 25%. You can forgive as much as you want, right? So we have tenants at Trinity St. Paul's who can't pay anything right now, and they're fully forgiven. You can also do, we have done this with some tenants, you can also do agreements with them where they will pay pieces later on. As long as it's clear that you have forgiven at least that 25%, you're good.
okay. Another question came in about how small a tenant does a small tenant have to be when still qualify? We've got a rental agreement, says somebody with a nonprofit fitness program for exclusive use of our hall, 2 hours a day, 5 days a week. Does that qualify?
I would say no. I mean, Eric and I have been back and forth about this because it's just not clear, but I think given that lack of clarity, I would say it's too small because it's not an exclusive use of that room consistently all the time, right?
Sure. Okay. Those are the questions for you, Kendra. I'm going to save the other questions that have come in the last 5 minutes and bring them in the next round, because I think we should go on and hear from Erik about his next slides. So thanks, friends. And as you see, I'm working hard to capture your questions. I'll try not to miss any and make sure that we at least have a fulsome discussion of the ones that seem to me to pertain to the whole country and not just to one very, very specific situation. If you've got a question that is really only about your church, might be better to send it to the help desk or to info@united-church.ca, and we can get you a specific response that responds to your particular concern. We'll try to save the time in this webinar for things that will touch more than just a handful of churches. Erik, back to you, if you please.
Next slide. So the 10% program, again, reminding people the dates, March 18th to June 19th, and that's any payroll run during that time. I'm going to use very casual language. You can dip into, subject to the rules, up to the 10% maximum, up to the $1,375, all the stuff that we covered in prior times. A significant majority of our pastoral charges are having ADP and the national payroll team do this for them. Again, a shout out to the payroll team. I know that they're, this was on top of everything else they have going on. For those who are trying to do this directly, the tools are on the payroll page, payroll services webpage, and I will go to the next slide. So this is, again, just a quick reminder to folks of how the caps work. So there's a $1,375 limit per person, but it doesn't matter how many hours they work as long as they're on payroll. This gets into the whole question of if you are taking deductions from people. My son worked at a grocery store for a while where if you worked 5 hours a year, they still set you up on payroll as an employee just to keep it simple and straightforward for them. And they took EI off. So in that situation, you would qualify for a maximum per person charged on payroll. The key point being that because of the 10% limit and because of the fact that you can only access the income tax bucket, it will take some number of months to maximize your subsidy. Next slide, please. So this is how it works, and this is a question, Steve, that someone you posed during the question period. ADP and General Counsel do a big batch process at the end of each month of payroll during the eligible period. So March was from March 18th to the 31st. And frankly, we're still figuring all that out. ADP is currently working on the June refund. That would be the third payroll period. That would be for the batch 2 folks, perhaps the second check that they're looking for. Those payments should arrive in early July after being verified by the payroll team. Any carry forward amounts from earlier times, because there wasn't enough money to max things out, are going to be processed after the June processing is complete. And the idea is to basically be able to show you what came out of each pay, and then what would the carry forward amounts will come separately, so that you have a clearer accounting over time. I want to stress that, and frankly, we learned this as we went along, there's all kinds of variables, and some of you have dived in and double checked the numbers and the calculations, but it depends of how you're set up. It depends on the timing, where your payroll fell in this bucket. In some cases, for smaller accounts, payroll is remitted quarterly to the CRA. So there's a whole bunch of stuff, and my short form is trust the system. I know we haven't got it 100% right every single time, but the whole idea is that we're almost at the end of it, and any cleanup or adjustments is on the to-do list. Next slide. So on the 75%, I'm just flagging here for the, just so it's all in one place, the various elements of the program, and of course that you need to apply online. I provided the link earlier to where all the detail is around accessing the online calculator, and Clyde has taken us through how you calculate it, how you claim it, the attestations and all of that. So that is in greater detail on the last webinar in May, if folks need still to go to that. Or they could send an email to CRA Helps, which might be mentioned on the next slide. We'll see. So key points here is this is processed on the payroll account, the RP number. And so you have to apply for, if you have more than one RP number, you have to do multiple applications. And if you're not on ADP, or if you have some on ADP and some not, then you need to have separate work papers. We've covered this in previous webinars, but the complexity arises here if you have unusual situations where your number, for whatever reason, doesn't match your charitable number. And there's all kinds, like, it's amazing the number of unusual one-off situations that we've uncovered through all this. Next slide, please. So this again is a recap slide. I'm not even going to go through it, but it is, it talks about how to do it. And as I say on earlier webinars, Clyde has taken us through this in great detail. Next slide. Key point though, life is more online. So these are you one way or another, you need to get set up online. We've had a lot of folks who struggled with that. The CRA help desk function that we've created, that Clyde is the guru, and Rose and Carla try to answer the most of the responses. We don't have any backlog at present. So if you're still struggling with that, there's one or two situations that we simply can't solve because
We lost Eric. We'll hope his internet comes back in a sec. Oh no.
He's lost to us, Stephen. Quickly, take over the mothership.
There we go. Well, I don't have much to say, Kendra or Clyde, but do you want to kind of step in and speak to this slide? I mean, I think he was trying to refer people to the help desk.
That's exactly where he was heading with it, because
Yep.
This has been done in detail, as Erik said before, and the information is there at the help desk. There's no backlog, and we would be glad to respond to questions as we need. And on rare occasion, I've even made phone calls to try and help people through, so it can help. If we can go on to the next slide, we'll just keep
Sure.
ahead.
We'll just keep carrying on here.
Yeah. Cybersecurity, this is a major thing at this particular time.
Oh, it's
I've
huge.
run into a number of scams that just floor me, how people come up with these and are willing to try and make a buck. And I guess I fall into the age group where they are targeting. So
That's okay, me too,
No,
Clyde.
we're all getting them. It's disheartening, but it's
very,
part of the water we're swimming in right now. And yeah, the caution here is well taken.
and yet you have to make sure that you are attempting to protect your information as much as you can on anything that you've got on computer. So carry on, go on to the next slide.
Sure.
Hi, Clyde, you said that better than I could have.
We're delighted to see you, Erik.
Hey, I'm glad that you
Welcome
could
back.
join us. Go ahead, we'll let you go back to insurance.
Sure. Well, we've spoken about we have to be careful here because about half of all congregations are part of the nationally sponsored program, and so you might have other insurance arrangements, but basically the entire sector is going, in my view, crazy, and despite reasonable claim results and so on, the insurance rates are just being jacked up across the sector. I think you've heard me say previously that I never thought I'd publicly say that I fought hard and did a bunch of work to limit an increase to 30%, but that's the way it happened. And we actually still have new entrants applying to us because they got bigger increases elsewhere.
Erik, I'm also working with the
So
National Trust for Canada on this because the letter that came stated that the historic status of our buildings was an issue too. So the National Trust for Canada is working on making a point about how historic buildings are not actually an insurance risk. So we'll keep working on it.
Great. So in any case, just to flag that, again, I have some folks up in Northern Ontario where their insurance company has said they must visit their empty, closed building every single day.
Wow.
And that's nuts. At least on the national program, we're saying, okay, can you try to visit, twice a week, just to make sure everything's secure. Oh, it's that time again. I want to say that the insurance company has been, I've shared Kendra's webinar on this subject of reopening, and basically our broker passed that on to the insurance companies, and they were just so impressed that from a risk management point of view, they had absolutely nothing to add, is what I'm saying. So the insurance companies are behind Kendra, which is, she's led the way on a number of topics in this sector over the years. And I just wanted to say they were very appreciative of the degree of risk management identified in that webinar. So again, I would refer folks to that. Next slide. You'll see we're covering now a bunch of different topics. Building reopening, we've got separate topics for this, but I just thought that folks would want the opportunity, and Kendra, very short notice, has made herself available. But there's the whole question of who we're reopening for. Most congregations, given the profile of our membership and so on, aren't rushing to open the doors for worship services per se, but other groups might be mandated to get back in. So just to state here that it's the community of faith that has to decide, obviously adhering to all local, municipal, public health, provincial guidelines and so on. And each region is trying to be as current as possible with their resources for you on this topic. One more slide, and then I think there might be questions on this topic for sure. So protocols, and Katja Britton helped to list some of these for us here. And so this information is from an email of hers. But again, there's a whole bunch of things that are new and different. Cleaning has a higher standard. So who's accountable for what in that regard, and who's going to pay as well. Record keeping, again, there's a whole requirement now around needing to know who's used the building when. Physical distancing, we've seen people with floor plans and thinking that through. And again, on contracts, we have to, what you're going to charge to pay for incremental cost versus your users having perhaps more limited capacity to pay. So there's a real balancing act getting that right. And this wording is Katja's, but I really like it and I put it on here and I endorse it. This notion of one strike and you're out. The tolerance of relative mediocrity when it comes to adhering to procedures and processes is a church thing. We accept it in our own operations. We have all great variability, but when we're talking about the safety of everyone involved, we can't be that flexible. We really have to do a good job here on how we administer the new standard for safety. Kendra, I don't know if I tend to over summarize. Is there anything you'd add to that, or is this list work for you?
No, I think this is good. One of the things that has come up in our large church group is how to do contact tracing but maintain anonymity. So we settled on receiving a list from each user group in a sealed signed envelope dated on the back, and then you just keep that for 3 weeks. And if 3 weeks passes without an outbreak, then you shred it. And if there's an outbreak, you just pass it to public health. Because I know anonymity for 12-step groups is a big deal. Toronto Public Health today was saying that they're requiring all staff entering buildings to sign off on a physical health checklist. So that was new to me, and I don't know whether other regions have that staff are having to say, I don't have a fever, I don't have a cough, I don't have a whatever. So yeah, that was new.
Yeah, and certainly just at the national office, we're wrestling with this. I mean, our office has been closed since March 17th, and with people working remotely. But we're, no one wants to be overly aggressive about certainly take risk on re-entering to whatever the new normal is. So I expect we will continue to see guidance evolve for the next few months at least.
Yeah, and I would refer everybody back to the webinar Stephen and I did a few weeks back. Interestingly, Stephen, nothing's really changed. It's more or less the same as what we were saying, 5 weeks ago? So, yeah.
Well, the science hasn't changed.
No.
Okay.
So, trying to understand how we respond to the science. Nobody's got any new bright ideas, but
yeah. So moving along on this and not diminishing this, I really just wanted to provide the opportunity because treasurers are often involved with the building committee or the property committee as well. Next slide, please.
There is one other thing we're working on that too, Eric, and it's a question of the upkeep of historic wood. So the Canadian Association of Heritage Professionals is working with the National Trust and me to come up with how do you sterilize historic wood without causing it to crack. So I hope to have some recommendations on that within the next couple of weeks.
Yeah. I almost chuckled there, but I mean, it's the kind of, only because it's the level of detail that we have to think about. And I'm just so glad there's someone who knows more about that than me in charge, because I wouldn't know where to begin.
Well, we'll get some words from the heritage professionals.
Yeah. So again, a stop here for questions, and then after this, we just have a quick recap with a few reference lists and just overall reminders for folks.
sure. And just while I'm doing that, I've posted a link to all of the recorded webinars that we've got at United in Learning about the COVID-19 stuff. The ones that Kendra is referring to would be the congregational programming during the pandemic. And let me see, it was May 28 and June 4. So you can go and have a look at those and look at the slides that we created for those. And as Kendra says, there's not a lot that has changed there, but you might find those helpful if you haven't already had a chance to view them. Not seeing a whole lot of new questions here. A couple of questions about loan purposes. Again, does the money have to be spent within this fiscal year if we apply for the CEBA?
I'm going to say yes, not because it says that in the guidelines, but it's certainly consistent with the intent. The reason you're asking for this money is because you desperately need to make payroll. You desperately need to pay your hydro bill, et cetera, et cetera, et cetera. This is not, yeah, if you're asking the question, I don't mean any disrespect, you probably don't need the money.
Okay. Do you need a payroll number to apply with the CRA to apply for CEBA?
It has nothing to do, other than the minimum qualification, it doesn't have anything to do with payroll. You do need to have a payroll of $20,000, which implies having a payroll number.
Sure. Well, this is a multi-point charge question, right? They've got one payroll for the whole charge, but this is a particular church that wants to make the application, it looks like.
So for the multi-point charges, again, it's really hard to explain that to the outside world. So where the pastoral charge has the payroll number, it's pretty clear, and has the charitable number. That case is clear. It's a little muddier where the underlying points have charitable status, but maybe the payroll resides elsewhere.
Mm-hmm.
You'll recall that we talk about aggregating that for the purpose of qualifying, like measuring revenue and so on. My advice on the loan would be that you're probably limited to one per pastoral charge, and you might want to share the proceeds. But do send us we can try to look at your structure and see if there's another way around that.
So is that a question that should come to the CRA response email?
Sure.
Okay. Thank you. Question about insurance, a question of liability insurance. What level of liability is available through the HUB program, and what level of liability do you recommend congregations hold? Well,
the standard for almost any size entity is 2 million comprehensive general liability. For larger churches, I would say at least 5.
Mm-hmm.
And you can have as much as you want, but I think I would say 5 is a solid number. And if you thought you had a greater risk profile, you could potentially ask for more. And I'm going to just put Kendra on the spot here. I don't know how much, Trinity St. Paul is, I've described as the single most externally used church building in the country. What number do you have?
It's 2 million. And we also, I don't even know if you know this, Eric, we designed a separate third-party insurance program along with Steve Beatty, which I can send the link to everybody, so that when you're asking user groups to provide insurance, there's an online thing they can do and get a response in 4 minutes. And
yeah. Okay.
Grace Meadows United Church, Grace United Church, Meadow Lake. We've been trying to open a CRA account, learned that we need a payroll number instead of a business number. Confusion around what the different numbers mean, I guess.
Email CRA help at united-church.ca, and whatever your specific circumstance is, typically your business number will be the same, and the only thing that will change is your suffix. But if you're in a multi-point situation or have a history of having been in a multi-point situation, you might have some anomaly with your numbers that aren't readily understood by the outside world. So if you check in with that email address, Clyde, Rose, and Carla will try to help you figure it out.
Okay. A couple of questions about the 75% wage subsidy program. One of them about monies and whether or not they need to be taken account of. The person writes, we've just received a $7,000 grant from a local foundation. Do we have to claim that money as income this year as we're trying to adjust whether or not we qualify for that program?
Yeah. Well, first of all, there's no question it's income. And Clyde, you can jump in if, too. The real question might be if it's if you could consider it extraordinary income for some reason. If it's an annual grant, I think you'd be hard pressed to do that. If it's
the purpose of the grant would be the key to it.
Yeah.
So we asked that question, Clyde, and the purpose of the grant was to cover COVID-19 expenses and new computer for the minister. So I think it is income.
It would be an expense or revenue. It would be revenue.
And what if it's a designated donation for a roof or for that kind of purpose?
That's still not extraordinary unless you're in a specific building fundraising situation.
So if it is part of a building fundraising program, so it's a designated donation within that program, it would be extraordinary?
I would consider it extraordinary.
Okay, good to know. Thank you.
And again, I'm going to just stress here that there's an element of interpretation. What the CR, if you ask that question of the CRA, what they would have said to you is, we follow the Income Tax Act and look at the facts, and they would not say any more than that.
That's right.
But having just said that, you're making a reasonable interpretation. If you're doing a once in 20 year replace the roof campaign, that's pretty extraordinary to you. If you're asking for building fund contributions every year as part of regular stewardship, that's
different. That's not extraordinary. Yeah,
that's not extraordinary.
Sure, that makes sense. So more on the wage subsidy program. They didn't qualify in May. They do qualify in June. Do they have to deduct the 10% amount that they received in May from the June application?
What they should do is, this gets a little more convoluted as we go along.
Does it ever?
Yeah. You can even email us the facts and we can look at it a little more closely.
Okay.
But the bottom line is the program ends on June 18th. And the wage subsidy program goes to July 4th. So there's some overlap stuff there. I think there's two ways you could go. You could just take 10% off to keep it simple, or you could get into a detailed pro rata calculation. Clyde, what would you say to that?
I would say that the application form says what you're eligible for. That's the question. It says, how much are you eligible for under the temporary? And so if you can do a rough calculation, I would not take a lot of time, waste a lot of time on it. If you really don't want to do that, put down 0 and it'll get reconciled later.
Fair enough. I'm not seeing a lot of other sort of broadly based questions. Okay. Again, I'd like to remind folks, if you've got questions that are very specific about your own pastoral charge, then I would send them to the CRA helps at united-church.ca or to info@united-church.ca, and we'll make sure that they get to the right place, and we'll try to give you sort of personalized response to your specific situation. If you've got questions of broad national interest, by all means add them to the chat, but unless I've missed something, I'm not seeing others right now, Eric, and I'd encourage you to carry on. Okay,
well, I don't need much encouragement for that. The next slide, please. Okay, so we've talked, this is a key message for anyone that's new. You're probably sick of it if you've been on these before. There's no place to hide anymore. I mean, you can't avoid having online accounts if you're going to be part of administering a charity. It's reasonably straightforward, unless your numbers don't make sense to the outside world. So the standard case, which is maybe 3/4 of us, we have one business number it has different suffixes. There's a payroll suffix RP. There's a charity filing suffix RR. There's a GST, HST, suffix RT, but it's the same number. But there's a bunch of stuff where and multi-point situations are often the case, or where there's some kind of historical anomaly. One more, I think, where we may need to help you. And this, the Meadow Lake folks, for example, it may be that we apply for a program using the payroll number, which is different from the charity number, and later on we reconcile this and true it all up. But we specifically set up the help desk to do this and help you do it.
Okay,
Next slide, please.
Yeah, did I goof and move slides? I'm cutting and pasting questions at the same
No
time.
problem. This
Is this the right slide you want?
yeah. Next slide.
No, thank you.
Okay, so Clyde said this. I've said this. I think even Kendra said this, although she's more precise with her language than I am sometimes. Some of this is going to get sorted. The main thing is there's so much happening at once. The rules are changing, the guidelines are changing. I give the government credit for trying to respond and be flexible and come out the other side of all of this. There's going to be some duplication or errors. There's going to be reconciliation of this probably in the fall. For the 10% subsidy, these are the pieces. It's 10% of the wages that you had in that period. Up to a max of $13.75 an employee. There's a further reconciliation on what you claimed for 75% if you're eligible. Keep detailed records of your thinking, of your attestations, of your calculations, and expect that you will need to spend a little time on this in the fall, saying, what did I ultimately get and how does it hang together? Certainly we'll try to help you with that as well. But it's just the nature of the beast that absolute precision here is the enemy of getting things done. Next slide. So this is a summary of what you need to do for the various subsidies. First of all, you need to solve the online challenge, which I think most of us have done now, not all. We process the 10% transactions. We determine the extent to which we're eligible for the 75%. And if we are, we use the CRA tools to apply. And then I keep saying this again, keep complete records for each filing. And that means even if you're eligible every month, have a separate little set of documents, including the attestation for each month. Next slide. We're in the home stretch, folks. So we update these periodically, with the most recent feature being the help desk. CRA helps, or is it helps or helps? Help? One of those. I better check that. Clyde, is it help?
It's without the S.
Okay, my bad. We'll fix that one up.
I'll fix that before, well, the slides are posted at United in Learning already, but wait till after the webinar and I'll fix that and repost them.
That would be great. I'm sorry for that one. In any case, we've got various contact information pieces here. Would want to stress again, some good news pieces. We've had the number of new PAR requests has tripled through this process as all of you have looked to secure steady income. I would reiterate too the mission and service message from the outset of this webinar that helps fund support for congregations like we're trying to provide right now. That's done through a combination of staff and volunteers and like Kendra and Clyde, but we really need to have that money coming in as well, so we can know where what the next year is going to look like, and we can start supporting our partners. Next slide.
Well, before we get to the next slide, which is your closing, just a couple of questions, and I wanted to turn to Kendra because there's been a bit of a conversation in the chat, and again, that won't be picked up in the recording, around liability what happens if we get sued because we did something wrong, and what kind of liability are we running into around COVID-19 issues? Do you have some wisdom to share with us, Kendra, on that, please?
Yeah, we did a webinar again with Front Row Insurance and the National Trust a few weeks ago. And generally, it is possible, yes, that you could get sued for someone having a case of COVID-19, which is why you have to be able to prove that you've done the things that are generally accepted standards. And the generally accepted standards are going to be different region per region based on what's going on, and will be advised provincially as well as municipally. So in Toronto, it looks like, you know, cleaning hand sanitizers, requiring mask wearing in public spaces, contact tracing, surveying staff to ensure no signs of COVID, and 6-foot distance markers. But that's not going to be the case in none of it, right? So you have to look at what is the reasonable level that can be required of a reasonable person, much like you do of board members, to judge what is best to reduce your liability.
So I would say, because we've got a national audience, the thing to do then is to to look at the website of your provincial public health department and ensure that your site is following those rules and that they are posted in your site in a way that anybody walking into the building can see them.
Yeah,
And then
and then
if you
Stephen,
can post them and you can document that you've done your landlord responsibility, that's going to go a long way to mitigating your risk of being sued.
absolutely. And then Stephen, as you and I said a few weeks ago, remember too, if you're a Sunday church, you go, you close the door. It takes care of itself. It's only 48 hours until basically the virus dies. So, you know.
Yeah, but if you've got only room for 25 people in your church, so you're going to have 3 services, you have to sanitize the whole place between them.
Exactly.
So that's the trick that you're working on, right? And so it's, some of this is situation specific, some of it is province specific, and you may get some advice from your region on that. Some provinces have papers for reopening churches, but check with your local provincial authorities, check with your local regional office for specifics on that.
Agreed.
As long as you can document that you've done what you're supposed to do, you should mitigate the risk.
Yeah.
Yep.
And it's Eric, I just want to stress the mitigate. If you're mitigating the risk, I mean, in this day and age, I can tonight sue anybody I want for anything I want. And that's just the way the world is. I can send an email, I can find a lawyer to issue you a letter. If you're doing what you can, there's going to be all kinds of stuff that's still figured out on this. And one of the elements will be just even good Samaritan type thinking, where if you've been prudent, there's just going to be a limit to any risk. And the insurance, you know, to the extent that there's any risk at all, the insurance is there to respond. So I would not get, I would focus on, are we doing the right things, and worry less about the insurance aspect.
Agreed. As a downtown urban church, Trinity St. Paul's gets sued all the time. It never goes through because we can document what it is we've done, right?
Sure. So that's
Okay.
helpful.
We get sued for ice all the time.
So somebody else is asking about resources and contracts and contractors that we might want to hire. And I would refer you to the website called buyingunited.ca. And any contracts that we've been able to negotiate a discount on, whether they're about special cleaning for COVID-19 or whether they're just about buying stuff at Staples on a regular basis, you'll find a bunch of different discounts and group offers and so on there that the Edge Ministries have been able to negotiate on our behalf. And I'd refer you there. And there's again another example of our mission and service dollars at work. It's when you send your mission and service dollars to us, we're able to do things like this with them. And certainly in my church, we've benefited from some of the programs at Buying United, so I commend them to you too. Not seeing other questions, so I'm going to give you 30 seconds to start typing, or we can move on to Eric's last slide. Big grin from Kendra that I can see, but you probably can't.
It's a bit dangerous there, Stephen, giving them 30 seconds to type. A lot of people can type in 30 seconds with 300 on the call.
Oh, there you go. Buyingunited.net. I'm sorry, memory brain freeze there. It used to be buyingunited.ca, and they relaunched their website. Okay. So thank you, Carol. Buyingunited.net.
Yeah. And folks, we do look at the chat box extracts to see if there were any questions that didn't get answered and so on. So not to worry on that. I'm repeating a slide for the closing slide tonight from the last one, because I looked at it and I just thought there's nothing, I can't say it any better. And Jennifer Henry offered this as one of her, I think even daily prayers about a month ago. And I'm not going to read it, but other than to say, you know, we had this picture up for several weeks of webinars where we talked about being in the same boat, and you know, I reversed course on that, no pun intended, and said no, we're in the same storm. And Jennifer's words here, that, you know, this whole notion of how we're going to get through this and being in it together, and beautiful intention are the words I'd highlight here. We're trying to do this. We're trying to be church, and I hope this has been a help to you. And you know, just from the team here, we just wish everyone to be safe and know that even by trying to do the best you can through these uncertain times, you're being faithful. So I'm going to stop there.
Thank you, Eric. You said at the beginning of our time together tonight that you thought there might be some new information coming next week. How certain are you of that? Do you think we'll be back on air next Wednesday, or should we just invite people to kind of watch their email?
Steve, I think they should watch for, I think they should check their email. I mean, we can do a treasurer email. I don't think there's going to be enough to warrant a webinar, although I'm happy to do one.
Trina's pointing out next week is July 1. It's Canada Day.
Yeah, well, might not. Well, I'm happy to do one then too. But the point being, what they're going to do is describe how July and August is going to work, and what the rules are. So I think we'll have some time to figure that out. We might even want time to digest it. So when we learn more about how the rules change, and this is for the 75% program, we can let people know.
Great. So with that, friends, I think we'll draw tonight to a close. I want to thank you for joining us. I want to thank Kendra and Eric and Clyde for making themselves available to us yet again on reasonably short notice to bring this important information to the rest of us. It's a privilege and a delight to be the national church together this way. And I am always moved when the chief financial officer of the organization is willing to come on the line like this and be so clear and so vulnerable and so helpful. Thank you. I'm going to take Clyde and Kendra and Eric into a private breakout room where we can debrief together. We'll say goodbye to the rest of you. Watch your email. If you've been attending these United in Learning webinars, you're probably already on the list. If you want to get on the list and you don't think you are, go to United in Learning and sign up for the webinar, and we'll get you on the mailing list for next time. We also have a list of everyone who is indicated on one of those statistical forms that they're a treasurer. So we'll use both those lists for the next one as well. And I have a hunch we will see you again. Meanwhile, have a great summer. We look forward to seeing you
everyone.
soon. Bye-bye, everyone.
Folks.
Anniversary, Steve and Clyde.
Okay. Okay.